Most property investors guess their stamp duty bill and get a nasty surprise later. Let's use this video to make it clear and simple. Hi, I'm Michael from MDH Accountants. We help property investors and business owners make smart financial moves. By the end of this video, you'll know exactly what stamp duty is, how to plan for it, and how this impacts you on your property business. So what is stamp duty land tax? This is a tax that you pay when you purchase a property. There are different rates depending on the size and value of the property, which are here. Now these rates can change from tax year to tax year. So at the minute we're filming in 2025. Make sure you get this checked out later as they can change. Now as a property investor, you will need to consider stamp duty because it's going to be as part of your cost of purchase. What the downside of this is this amount actually goes on your balance sheet as a cost of the property. So if you're buying a property for say £10 to use round figures and your stamp duty is £1, the cost that is going to be sitting on your balance sheet is 11. The stamp duty does not get offset in your profit and loss account against your rental costs. You get the benefit and tax relief from stamp duties when you come to sell the property. This is sometimes a myth that people miss. Now, as a property investor, you will be paying stamp duty when you purchase a property, not when you sell it. The buyer pays it. But as a buy-to-let investor, if you've got a second property, which also includes a limited company, you have now got an additional 5% stamp duty charge on that purchase. Now that's only come in fairly recently, and it's been a kicker when we've been prepping buy-to-let purchases to purchase. I mean, 5% is a big punch in the face and can make an okay deal into a negative deal, because just remember, property purchasing is all about the math and it's not about emotion. Exemptions and relief. One exemption that's really common is if you inherit a property, this property does not have any stamp duty attached to it. If you'd like some more tips and tricks on exemptions and relief for stamp duty, download our book, which is 70+ ways to pay less tax. There's a few stamp duty tricks in there, as well as a load of others that will help you personally and for your business too. But make sure when you're structuring a property deal, you are including the stamp duty into that, because you will need to find normally a 25% deposit for the property plus the stamp duty, but the stamp duty you can't finance. So you are going to need to pay that out of cash that you've got up front. So when you're doing your discounted cash flow to see what your true return is on the investment, make sure that you're including that stamp duty land tax, because sometimes that can turn a good deal into a deal where you just need to walk away from, because property investing is all about the math. Hope this video's really helped, but if you're a property investor or a business owner that's looking to grow, click a growth call below. I'd love to have a chat with you to get to understand you about your goals of your business. We can have a no faff, straight talking meeting where we can look at your business goals and say, how do you get to where you need to get to in the future? If you're a business that's turning over 750,000, click our link below. This is the 7 growth drivers which you will need to turn your 750 grand business into 3 million, and to do it profitably too. I'd love to see you in that course today and how them business growth drivers could seriously improve your business.